As everyone knows, tomorrow, sorry, not tomorrow, on the 18th, we're going to have the FOMC, right? 18th of September. Oh, that's not a nice night. Yeah, 24. We're going to have the FOMC. All right. FOMC. Right. And the market at this moment is priced in a 50 basis point cut. Okay. I think 67% of the market is specifying 50 basis points cut from the Fed. Okay, so it's going to be really interesting. Now, I want to know what you guys think. What are you guys thinking? 50, 25? Just throw a random number if you don't know. So just I can sort of understand what everyone is thinking about this FOMC on Thursday. I want to show something later. Okay, Zodo 25, Steve 25, Casey 25. Oh wow. Andre is thinking of a 50. Is that correct? 1, 2, 3, 4, 5, 6, 7. Wow. Out of 7 people, 6 believes the 25. Well, 7 believes the 25 and 1 believe on a 50. Okay, so we have 50 against 25. So we got 1 against 7 people. Okay, very interesting. I'm on the 25 as well, so 8, and it's going to be very interesting to see this 18th of September. Now, what I want to talk today is, of course, FOMC. Okay, FOMC cutting. So that's going to be the first topic of today. Second topic of the day, it's going to be US retail sales. Okay. That may be, I think it's worth talking a little bit about it, just because it's retail sales and it somewhat can generate a little bit of volatility into the market tonight. But bear in mind, we are on an FOMC week, and sometimes, most of the times, let's say 70% of the times, the news, the data that releases before the actual date of the FOMC, they don't have such repercussion as they would if the FOMC weren't in that week. All right. So yes, maybe it's going to be worth to trade retail sales, maybe not. All right. And third, the US dollar index. Okay, USD. And then what I think will be my my trade idea from that. Oopsie. Trade idea. Okay, let's go. Oopsie. Trade idea from all of these 3 topics here. Okay. Right. Any questions before we start? Let's see the chat here. Sweet say it's going to be detrimental to cut 50 basis points. So because they know that I agree with you. Do you trade during FOMC or do you avoid it? Usually I have my positions already done. So let's say like the FOMC is on Thursday, right? I have my positions already set it up on today or tomorrow because I'm predicting something to happen, and then I just don't trade on the day. I just manage my trade during the FOMC. That's pretty much what I do. Matthew say that he's expecting a 25 basis point, but I think that the Fed will not want to shock them. In ING's Forex Daily, it says, remember that the last 2 key data releases, jobs and inflation, that is 100% correct. And that was the point I was going to talk. did not really point into a half-point cut. And growing dovish bets actually started late last week. I agree. On the back of some media reports that tomorrow would be a tight decision between 25 and 50. Our economist team is nearly in favor in 25, but admits it's a very close call. Okay. Okay, that's really good comment. I think I've heard that. I think I've read that from ING this morning or yesterday. Not too sure. But anyway, so that's what we're going to be talking today. So as usual, let me take a screenshot of this. Just a second. Perfecto. Here we go. All right, guys, let's just start it. Okay. First thing I want to show is the CME. I've showed these many times already, this tool. It's a very handy tool. Okay, it's from CME Group. You can participate on voting. What do you think it's going to be the next federal the Federal Open Market Committee vote? If it's going to be a 25, it's going to be 50, it's going to be 75, it's going to be 100, it's going to be 1,000, whatever. You can vote. You just need to make an account with them, and if they think that you are worth the vote, they will send you a quiz, and then you can answer those questions, and you can do the vote. But to be honest, most likely economists, hedge fund traders, institutional traders, banks, pension funds, etc., that do the voting here on the CME. Bear in mind, it's a tool. Okay, it's not 100% odd thing that whatever it says here, it's going to happen. It's a completely opposite of that. It's just for you to have a sense. It's just for you to have a north or where to look at and what to expect from and what the market is expecting. Okay, now if we look at here, it's really interesting to see how the trajectory of the FOMC to cutting 25 basis point a few weeks ago to now cutting, like a month ago was 25% of the people were expecting 50 basis point cut, as we can see here, and 75% was expecting, and 75% was expecting only, majority was expecting to 25. And then a week ago, on 10th of September, 34%, was expecting 50, and 66 was continuing to expect 50 basis points. One day ago, the 13th of September, 50, all right, 50% chance to cutting 50 and 50% chance to cutting 25. And then now we have 67% of people expecting 50 basis points and 33% of market participants expecting 25 basis points. Now, there are lots of theories behind these. Okay, this has been going around on X and the previous Twitter, now bought from Elon Musk, call it X. I still found a bit strange to calling Twitter X, but whatever. It's just the letter X. Feels like you're just throwing a random letter on the phrase. But anyway, so on the X, a lot of people are talking about this is crazy, but it's doable, and etc. Now, I want to look back at exactly what Matthew have said about the last two key data releases that we had from the US. The NFP, the ADP, right? Everything that regarding jobs and inflation. Okay, so if we come to the economic calendar and search for United States only, and start the date from last month, August, to today, we can select only medium and high probability, medium and high volatility. And we can see that the last interest rate decision was no changes. Okay, so no changes. I think that was pretty well known already. But if we continue to scroll down a little bit, the unemployment rate keeps raising. Okay, that was on the 2nd of August when we had unemployment rising to 4.3% from 4.1%, and the non-farm payroll cooling off from 175,000 expected to 114,000 from the previous of 179,000. Okay, so really interesting to think about these numbers, but bear in mind, this is from August. Going a bit lower to September. Let me load it more. Friday, September, here we go. And Thursday, Friday here. We had 142, lower than expected as well, from 160,000. Now, the average hourly earnings was expected to be 3.7, came in at 3.8%. And the unemployment rate continued to be at 4.2%. So it went from 4.1 to 4.2, and now from 4.2 to 4.3, and now back to 4.2. All right. So interesting to see the dynamic of the market pretty much doing this. Let me grab a pen. Okay, so we were here, now we're back to here, and now we're there, and now we're here. Right, halfway. What I'm looking at is we had some indecisive moves, and the FOMC wouldn't be able to cut 50 basis points, because there's another very important point here, is the, is the CPI. Okay. And the CPI, you know, the inflation rate year over year was 2.9%, but the most important is the core inflation being at 3.2%. Okay, this is wrong. This is not 3.2. It's supposed to be 3.3. Okay, so this is the wrong data. This is not correct. It's supposed to be 3.3, one tick higher than what was expected. I can guarantee you that. Okay, so this was 3.3%. So one tick higher. Now, what's more important? I want to ask you guys, what do you think it's more important for the central bank? Do you think it's the normal inflation or the core inflation? And if you know what is more important, then why do you think that's more important than the other? So please put down in the comments. Now, again, the central bank has only one way to decide when to cut the interest rates. In my opinion, this is the easiest way. Okay, so let's grab it. Let me go to the end. Okay, maybe to the top. I just want more white space where I can drag and show you. Okay, so there's core inflation excluding energy prices. That's correct, Lawrence. You're right on the dot. So yes, the core inflation is more important for the central bank, because they can't control energy and food prices. Okay, they can't control whenever it's going to be a raining day, and then you know, all the lettuces from the farmers will be destroyed, and then the price will increase a little bit. Or they can't control the chickens to put more eggs, and if the chickens don't put eggs, then you know, whatever is going to happen, and etc. So it's very hard. The Fed can't control the food prices, and either the energy prices. Okay, now what they can control is the other things that are included on the inflation, transport prices, mortgage prices, loan prices, etc. This is something that they can control very easy. Now, this is why the core inflation is much more important. Now, coming back to what I was about to tell everyone, let me change it to black. Okay, so there's, in my way, okay, there's a simple way for the central bank to cut interest rates, to starting cut interest rates. I've explained this once, but it's a very tricky interplay okay, between inflation and rates. So remember that whenever a central bank hikes 25 basis points or whatever they do, 50 basis points, whatever, it doesn't get felt on the market for at least 3 to 6 months. So if a central bank hikes 25 basis points today, okay, it will probably won't be felt in the mortgage prices or into loan, etc., in the next 3 months. So probably only in January, okay? In January in 2025, it will be felt into a mortgage, all right? So what does that shows me is pretty simple, okay? We have the interest rates coming something around this. As of the inflation, let me change the color. Inflation is going to be in red, okay? Inflation, when the central bank starts to hike interest rates, inflation is already going higher, okay? So this is when we can see right here on these 2 lines crossing, is that when the inflation went up and the central bank starting to increase rates. But there's always a gap, okay? We always have a gap between here to here, right? And this is the gap that I'm referring to. When we see inflation coming back down like this, then what we need the rates to is to maintain consistently high. If the rates are not consistently high, and if they see that inflation are coming to fill it up this gap here, right, then they start to cut interest rates, and the rates start to do something like this, inflation will be always higher than the actual proposed rate. So that shows to me that whenever the rate starts to be cutting too soon, inflation will take over again. And what will happen is back to here. And now we have even higher. Okay, let me grab it here. If they maintain a consistent curve here, let's say they keep pausing, we have even higher now from here to here gap than we had before. So this is a very tricky point, okay? What in my opinion this has to do with the Fed? Well, pretty simple. Let's say that this is the Fed, the black line is the Fed, and we've seen we've seen the Fed at 5% interest rates, okay? 5.5% interest rates. Let me just note that down, 5.5% interest rate. And then the inflation, let's measure the core inflation on a yearly basis, okay? Getting more data on a 3.3% inflation rate. Okay. So 3.3% to 5.5, it's a 2% differential between one to another. Still a lot to be done. If the Fed comes and cut this from 5.5 to 5, what would happen is the exactly thing that I've mentioned to you. Inflation will continue to go somewhat stagnated and a bit lower, but the rates would be coming to somewhere on here. And then they continue to have this gap. So if they cut 25, inflation would, do the exactly same, but this would be somewhat here. It would be smaller, okay? So what does all of these has to do? In a pretty simple terms, it's not the time to cut 50 basis points. And to be honest, it's not the time to even cut 25, in my personal opinion. I would suggest, if I had a voice, to maintain at 5.5. I know for at least another quarter, for at least another quarter, because we did show inflation coming higher last release. We did show prices going higher, people getting paid more, less jobs on the economy. Okay, I know all of that, but most probably would be better for the Fed to maintain a neutral to hawkish approach between the rates at this stage of the market. But then they look at, they look at all the other countries and they think, oh, wow, but everyone's already cutting. Everyone is, sorry, everyone is already cutting 25, everyone's cutting 50. UK will probably be the one that's going to be last cutting. I mean, to get back to target. I mean, not last cut, literally last cutting, but you guys know what I mean. So it would be very interesting if they cut 20, if they cut 50. It would be very, very triggering the market to sell off on that. All right. Okay, let me do another point now. So if the Fed, let me ask everyone a question. Did everyone understand what I've meant by this draw here? Let me just grab my pen again. Is everything clear here, or does anyone have any questions around that? We call this the rate to inflation differential. Okay. Let me just write it down. Rate, oh, that's in white, that's not good. Rate inflation differential. Steve probably knows better than me because he's Australian. I don't know if differential is right spelled correctly, but sorry. All right. So rate inflation differential is the difference between the spread difference between the inflation and the rate. All good? All got it? All fine? Can we move on? Any questions? No? No questions? Okay, moving on. Okay, cool. Let me delete all of that. Moving on. So now I want to ask everyone a question. So based on the explanation I gave to everyone, what would happen with the US dollar if in this condition, as we have right now, 67% expecting 50 basis point and 33% expecting 25 basis point, what would happen with the US dollar if they cut 25 basis point and not 50 basis point? That's a simple question, but I want to test everyone. Would the US dollar be weakening, or would the US dollar be strengthening? Okay. Steve will say DXY to go up. Satish say initial reaction will be USD appreciate, then reverse. USD will be stronger, positive dollar. Okay, that's awesome. That's really good, guys. That's awesome. Okay, everyone got the correct answer. And that's exactly where we come on, and that's exactly the point we came in. So that's the answer. So US dollar will be very strong. Let's open, let me just close this. Let's open the US dollar index here pretty quick so we can see the price that we have. Let me just open this window. Just a second, guys. Okay, cool. Right. So we have US dollar index right here at the 100.689 level. And is depreciating every minute more and more. If we look to the daily time frame, we can see that is on a support, and the support is the level 100. It's a psychological level. Okay. So level 100 is the support. Most probably we do have somewhere between here as well. So it is a between 100 and 100,000, 800 to 100. Okay. So 800 points of support that I'm believing to be somewhere like that. Okay, perfect. So we are into the support area at this moment. If we break through the 100 level, it's gonna be really not good because we haven't broke that since February 23. Okay, and then in July we've tried to, but there was sort of a false break and came back, retested, came back, and now here again and then going up. So it looks like for me that this is the support. This area is the support. Okay, and this is the the resistance, and this is somewhere the support. Okay, so really, really interesting what will happen here. I do believe that the banks are probably buying US dollars and that they are most likely hedging those positions on the Japanese yen. Okay, so we have Japanese yen very strong at the moment. Compare it to US dollar. Okay, so Japanese yen is a safe haven at this moment as not the US dollar because too much uncertainty here. And then on here, we know that's going to have another 25 base point hike in December. That's what weather has said to us. Okay, so my opinion is pretty simple. This is a daily, let me put into a 4 hour. We are into, wow, that's really slow. We are into a support area. We have a box here. And we have another box here on the extremities. Okay, where is my drawing? Here. Here's one. And here is another. And yeah, this one is already taken. So, because see, this already came back to here. So it went off and it came back. So it doesn't count, okay? And we tried to break through 1, 2 times, 3 times now, and no Sussex. So 1, 2, 3 times, and we couldn't do it. So still plenty of room for us to just do this. Bounce back, breakthrough, come back, retest, first target, second target. Now, this would be my first bet, right? This would be my first option to trade US dollar, to be very honest with everyone. Now, really hard to see such a move like that happening in a 1 hour candle. Not talking about that. But if we break through this level, then we will probably come back lower. Oh yeah, the conditions would be, this would happen, this setup would be happening for a stronger US dollar if we have a 25 basis point cut. Okay, 25 basis point cut, 25, sorry, I've missed them. We don't need this, this is wrong. It's supposed to be BP here. BP. 25 basis point cut and a neutral to hawkish statement. Yeah. If we only be neutral, then on a 25 basis point cut, we may see some move to the upside and then reversal. But if we see hawkish statement, neutral to hawkish statement to 25 basis point cut, then yes, we can see a very bullish US dollar. Okay, so now that I've told about the FOMC cut and the USD, all right, I've explained what I think about the FOMC. I've explained about the US dollar. I want to just bring attention back to one point of this game, okay? I want to bring attention to ECB. If you guys remember the last ECB meeting last week, but not this last week one, the last month, Lagarde was somewhat dovish, all right? She was somewhat dovish, and that's why the euro dollar had such a big decline. And my opinion is a dovish. So she was dovish, and then she turned hawkish out of nowhere, making the euro dollar, you know, go up crazily, as we can see on here. Euro dollar. There you go. So this is a daily chart. Let me put in a 1 hour chart. So we saw from here, it's where she gave us a speech, hawkish speech, 25 base point cut, but hawkish speech. That's exactly what I think will happen with the US dollar, okay? But just the opposite, all right? And then euro dollar could come back lower to levels such like, let me put in a 4 hour. I think just remembering everyone here, we've still on a downtrend, okay? Because we broke through this top, and we broke through this bottom, and then we've made a comeback, retested this area somewhere here, broke through this bottom, but we haven't broke through this top yet. Not even close to that. I think we will hold on, all right? I think we won't break through this, and we will come back to somewhere between here, okay? On euro dollar, that's on euro dollar, okay? I can be very wrong, but I can be very right as well. And that would be very good, all right? Because there is a continuation probability much higher to break through this bottom here, okay, to break through this bottom and continue to go lower. So that's my opinion on euro dollar as well, as already we're talking here. And the Fed was maintaining a somewhat dovish approach to neutral approach. I think they will turn, as Lagarde did, and change to a hawkish approach. Okay, so that's my opinion for the US dollar. Now, we have some other data coming up tonight, and that is the US retail sales. So Tuesday, where is it? Monday, September. Where is this? Okay, there you go, retail sales here. Let me click on it. There you go. So we are forecasting 0.2% sales from the previous of, where is this? From the previous of 1%. So coming up from 1% to 0.2%. I totally disagree with that. I totally disagree with the 0.2% forecast only because yes, everything of the rhetoric, the context lines up. And remember what I've always stated to everyone, context is the king. And when it comes to fundamental analysis, all right? So leave this in your mind. Context is the king when it comes to fundamental analysis, just not like the data. Can we access repeated broadcasts? Yes, you can have a look. Yeah, thanks, Wits, on the YouTube. Yeah, thank you. So, as I was saying, the forecast is 0.2% and from the previous of 1%. So it's going to be a huge difference. Like, come on, man, 0.8%. I get it. I get it. What's like, yeah, no jobs and, you know, people getting laid off, but still those people that are working, they have to continue to buy products. So they will, okay? And as they're getting paid more now, and we're getting closer to New Year and etc., we do have a possibility of people already buying gifts. I know you may think like, oh, it's too early, but I mean, my grandpa used to buy my gifts like in January to the whole in December, you know. So yeah, I do believe that this is completely wrong. I believe that this is probably coming like at 0.3, maybe 0.3, but 0.2, I'm not seeing too truthfully, let's say. Okay. All right. Now I think that's pretty much all from me today. So we've had a look at the FOMC cut, and we saw that 65%, 67% of chances to cutting 50 basis point. This can change, all right? So I will send this website to everyone here again. So do your daily analysis. Come here every day on CME and have a look on this on a daily basis, because this can change every day. So on yesterday it was 50-50, and now today 67% to one and 13% to another. So it's always very helpful for you to have a look on it, and don't lose your brain thinking that this is 100% tool. It's not, okay? Just bear this in mind again. So we've had a look at this, and we know what's going to happen if they cut 50 basis point, and what's going to happen if they cut 25 basis point. The best situation is bullish, okay, and the worst situation is market not moving a lot. All right, so it is a very good way to enter the market at this moment, and I don't think we're going to have such an opportunity like that in anytime soon. Such like 67% when we know that it's not going to happen. But if it happens, 67% was expecting already, right? And if it happens to be 25, then it's going to be bullish. So, I mean, it's such a good opportunity. We've talked about the US retail sales, where I'm thinking that, yes, we have less people working on the labor force. We have less people getting employed, but we're still getting those people employed, getting paid a bit more. And this will lead to higher costs because someone may not be working and then they have to buy double, all right? And the US dollar, most probably scenario for myself is to go up. So a bullish aspect on the pricing of DXY. If then we break through the 100, as I've mentioned, if we break to the 100, then I have to turn myself and say, look, I was wrong, and most probably we will then initiate a bearish trend. And I've talked about my trade idea on euro dollar. Again, I think it's the most reliable trade idea, to be honest, against all the major pairs. All right, guys, trade safe, use stop loss, make sure to always review your risk management. Thanks everyone for coming. We can chat again tomorrow on the YouTube. And Adenuga, hopefully Sweets have answered your question. Thanks, Sweets, to helping through. Yes, this will be available on the YouTube channel, ACY Securities YouTube channel. Let me show it to you. Here you go. So you can come here tomorrow. You can come here tomorrow, and then it's going to be here, like this one. Okay. Sorry. Webinar replay. Can you see there's webinar replay? So it's going to be exactly like that for tomorrow. Okay. So tomorrow you can come here and have a look on it. What else? Not a problem, guys. Muito obrigado, Sweets. Thanks, looking good evening over there. Thanks, Lawrence. Are you going to be live on the FOMC, Luca? I'm not going to be live because it's going to be 4 a.m., but I will be definitely awake. If you need to message me, you can message me, not a problem. What will happen to US dollar when Fed cut 25 basis points in dovish statement? Well, I don't think they're going to cut 25 basis points and then have a dovish statement. That's going to be very, very rare to happen. But if that do, I most likely see US dollar going up once they do 25. Then when the Jerome Powell comes in to do rate statement, and then bearish. Yeah. The bearish fits, yeah. All right, guys. Thank you all. Have all a great week ahead, and see you all. See you all next week. Sorry, next Thursday. Bye bye.